Good morning, good afternoon, good evening, and good night, depending where you are joining us in the world today. And welcome to another DC live stream. My name is Wasim, your host, and unfortunately, I'm the only host today. Matthew can't join us; he's unavailable tonight. So let's get straight into it, and let's get into today's news highlights. So first up, we have. Uh, Okay, this is great news coming out of Brazil, where the cryptocurrency law approved in Brazil, which now has accepted Bitcoin and other cryptocurrencies as form of payments. Now, this doesn't mean that they are considered as legal tender. However, this law is not complete law. They have missed out on a number of things, such as the green mining tax, where they're looking at where the original proposed bill was supposed to have tax reduction for green mining. Also, there's been no laws coming in about asset segregation, which is an issue that a lot of exchanges, especially centralized exchanges, need to be looking at, especially after what's happened with FTX. One of the things that this original bill was trying to address is that any exchanges need to segregate the customer's assets from their own assets, meaning that customers' assets will always be safe no matter what happens to the exchange. This law hasn't come in, and there's been talk that this law has been pushed forward before the new government comes in January, because we don't know what this new government is going to be like and what their stance on cryptocurrencies are. Especially that the new president of Brazil is a WEF member. So it's going to be a rocky road for Brazil. However, this is the first step towards regulating crypto assets in Brazil. And as we know, Brazil is one of the largest or the largest Latin American country, and they're very, very bullish. And the adoption in Brazil with cryptocurrency is one of the biggest drivers around the world. So let's see what happens over the next couple of years. But it's interesting to see Brazil moving forward with digital asset regulation. Alrighty, moving on to the next one, we have FTX Japan drives plans to return their client funds. So I don't know if you guys have seen over the past 24 hours, the scam, bank run, fraud has been interviewed by the New York Times at their Deal Book Summit, and I watched the video. It was about an hour and a half long. Bank run, fraud was avoiding most of the questions, giving very, very vague answers, and just apologizing over and over again, and did not give any real answers. However, what he did say was some of the other exchanges around outside the FTX in Bahamas were liquid and did have funds. Now, I spoke to someone here in Australia who knew the people in FTX Australia, and he said FTX Australia actually did do the right things. They have their customer assets segregated. This is obviously coming out that in Japan, which FTX came into Japan in June 2022, so it was about 5 or 6 months ago where they got regulated. And part of the Japanese laws is that exchanges have to segregate client funds and client crypto away from their private ones or their own assets, therefore always protecting the assets of the clients. Now, because of this, FTX Japan has now put in the draft and a plan to say we shouldn't be part um, of the bankruptcy that has been filed over in the Bahamas. We've got our assets funds and we can start withdrawing them. Now, this doesn't mean that FTX Japan is going to be running fully up and running, but there is potential that they can start giving their clients funds back to them before the end of 2020, so within the next month. So exciting news. This is a good step forward. I hope other FTX subsidiaries such as Australia and other countries who may have done the right thing, regardless of what scam, bank run, fraud has done, some of these other exchanges may have done the right thing in the right countries, and hopefully they can start opening up their way, opening up to allow their customers to withdraw their funds, which is going to reduce the burden on a lot of us, especially here in Australia, if that happens. I'm not saying it will, but if this causes a precedent, then some of the other subsidiaries might turn around and say, "Hey, look, we've done the right thing. We've got the funds here. We're not affected by what happened in Bahamas between FTX and Alameda, and maybe some of us or some people who still have funds, and I didn't have any, but some people who still have funds on FTX might be able to get it back." So for me, This is a good news for the users. I hope it does go through, and I hope more and more people are able to get their funds out of FTX and scam banks to bank run fraud ends up in jail for everything that he's done and how he's defrauded so many people. All right, next up in the last one in our news highlight, Coinbase blames Apple's new policies on disabled NFT transfers. So if you've been watching Twitter, if you are on Twitter, there's a big backlash coming out against Apple right now. Number one is it's come to light that one is Apple is taking a 30% tax on any apps that make $1 million or more. The app owners have to pay Apple 30% of their revenue. Also, other apps have come out, like Library have come out, that they have been censored by Apple during the pandemic when they had to remove certain things out of their library. And also, Apple is threatening to remove Twitter from its App Store. Now, I personally, guys, I don't like Apple. I've never been an Apple fan. I've always said to go with Android. Android is an open source. Many different softwares, many different hardware providers can just provide the Android software on their hardware. But with the Apple iOS, it is a very centralized, very controlled operating system that only works on the Apple hardware. And if you know anybody in tech, everyone will tell you that there is very little amount of margin when it comes to Apple products, because Apple is a very centralized, very greedy company that takes all the profits to themselves, and this is proof. So what they're trying to do here with the Coinbase app is when people want to transfer their NFTs in the Coinbase app, Apple wants to take 30% cut on that. Now, the problem with that is this 30% is the gas fees that happen on the Ethereum network. And some of the backlash is when, well, this is like Apple saying that they want to take a cut from somebody sending an email to another person on an open source network, which is what Ethereum is. So a lot of backlash is happening now against Apple, especially with what's happened over in China with the Apple City. Apple's going through a really tough time. And me personally, I'm not a fan of Apple. I always tell people, go get yourself a real phone, go get yourself a real computer, because Apple is very centralized, very controlled, and everything you do is reported back to the to Apple head office. All right, let's have a look at the crypto market. All right, over the past week, we've seen a lot of the altcoins pumping. Doesn't mean the bull run is back. It just means that with Jerome Powell coming out being more dovish recently and saying that there's going to be smaller interest rate hikes, they're trying to reduce the amount of damage they're causing to the economy. So this has caused, not just crypto, it's also caused stocks and gold and a few other commodities and investments out there to pump. And we're seeing this happening over in the altcoin market over the past week, with Ape having over 20.2%, Doge 20.8% increase, GMX 21.8%, Ethereum W, or this is Ethereum proof of work, at 21.6%. Phantom at 37% increase over the past week. Now, this is still 37% from when they were down, and most altcoins are still down, about 70 to 80 to 95% down from their all-time highs. So it's a good step forward, but doesn't mean we're out of the woodworks here, guys. And what we can see over the past 24 hours, we've seen a lot of red across the crypto market. Bitcoin down 1.05%, Ethereum down 0.7%, BNB down 2.78%, Cardano down 0.94%, XRP down 2.56%. A lot of the alts are still struggling. Bitcoin is struggling to get back over that $17,000 and hopefully that $20,000. But this is the time where generation wealth is happening, and this is the time that we believe we should be dollar cost averaging in. Not financial advice. Always do your own research. Always invest only what you're willing and can afford to lose. But we believe that this is generational buy territory. And last but not least, when it comes to the markets, let's look at the Fear and Greed Index. As I always say, and I repeat what Warren Buffett says, When people are fearful, be greedy, and when people are greedy, be fearful, or is it the other way around? I can't remember how he says it. But this is showing that right now we're still in that fear stage, in that fear index, that fear part of the index. Sentiment is people are still afraid out there. People are still very, very cautious. We could possibly have another leg down. There's a lot of people calling for a $12,000 or even $10,000 Bitcoin. So people are still worried about deploying their dry powder. So yesterday was also 27. Last week we were in extreme fear at 20, and last month we were at 30 in terms of the fear and greed index. Alrighty, let's move over to the Twitter highlights. Someone has sent me just see what they had to say. Great job. Thank you very much. I don't know who that is. On Time Sport. Thank you very much, On Time Sport. Okay, moving over, we've got Dan Tapiro, and he says, incredible to think that investors taking less risk now than at the bottom in 2008. Felt much worse back then. Feds panicked over tightening as the driver of fear. Consumers' demand dropped, coming back in coming, but so is new liquidity spigot. I don't know what that means. Time to load up on long duration, high risk assets, BTC, buy Bitcoin. So what he's saying is that the right now people are still very, very afraid. It's still at all-time low, even lower than it was back in 2008. Even that felt worse back then. I think the FTX collapse and the whole scam, bank run fraud, and what he's doing out there is really scaring a lot of people, and a lot of people are afraid to deploy their funds. And I think we're still going to see at least another 12 to 24, maybe 18 months of this bear market before the next halving, which I believe is going to be the start of the next bull run for Bitcoin. All right, Mr. Peter Schiff, Mr. Anti-Bitcoin. Look, as much as I don't like Peter's views on Bitcoin, I must say he does have some strong and some good views when it comes to the broader economics. I don't understand how someone who understands economics and understands the problem of the financial system so well cannot see the beauty and the power of Bitcoin. But putting that aside, he says, Challenger announces 76,835 job cuts in November, more than double in October and 5 times more than November 2021. 70% high-paying tech jobs are out. At the same time, personal saving rates plunged 2.3% to the lowest since July 2005. Workers will be losing jobs with no savings and vanishing home equity. So what he's talking about here is a lot of tech jobs, and I heard somewhere on another podcast that something like 100,000 high-paying tech jobs have been retrenched, which means there's a lot of high-paying tech people out there looking for work right now. Also, savings at all-time low at 2.3%, which means that people don't have a lot of savings, and house prices are going down. This is a recipe for disaster, guys. If this trend continues going, we're going to have some really, really tough times coming up. At the same time, for those of us that are smart enough, for those of us that are doing the right thing, living below our means, putting money aside so that we can deploy our dry powder into the market when the time is right, these are the people that are going to find generational wealth. So get smart, get educated, get control of your money, start putting money aside, and get ready to deploy when we see the bottom of the market is bottomed out. Last one is a really cool video by documenting Bitcoin. And this is a heartwarming video for me where we saw in El Salvador students. I want to play a part of this video for you guys where we're seeing students actually depositing their coins and getting Bitcoin back into their wallet. So let's have a look at this video and see what's actually happening over there in El Salvador. So you can see a huge lineup of students coming in with their phones and their coins. They're coming up to these machines where they can deposit their coins so that they can get Bitcoin back. This reminds me back when I was at school and we used to have the Commonwealth Bank coming in with those little, I can't remember the name. It was Magic Saver or something. I can't remember the name of the Commonwealth banking thing. You get these little piggy banks to put your coins in. Please answer Any news on TRX? TRX? What do you mean by TRX Omni? On time, I'll let you know, but I can't see any. I don't see your question. Back to this video, guys. You can see the students putting in their coins and then loading up on Bitcoin. This is how you teach children, how you teach young people about financial literacy. Bitcoin is freedom. It can't be controlled by anyone. Every time you're stacking sats, you are putting your money aside and out of the hands of any regulators or any bad actors. On Time Sport, I'm not a big follower of Tron. I hold a very small amount of Tron. I can't answer your question about it unless you have a specific question about any news on there that I may know. I'm happy to answer it, but right now I don't know what your question is. All right, let's move over to the next one, which is Italy to impose a 26% capital gains tax on crypto profits. So the Italians are coming in after the crypto profits and they want to take their share. So they're saying any profits over 2,000 euros, which is around 2062 US dollars, will attract a 26% capital gains tax. So up until now, it's only attracted about a 14% tax. But now, because they used to view it as a foreign currency, but now they're viewing it as a digital asset, which means capital gains tax is higher, and they're encouraging people to put their whatever taxes, whatever crypto they have on their taxes by the 1st of January. So this is look. My personal opinion on this is that these governments don't get it. Well, they don't understand that a lot of people, if they're going to start, they have they got something like 2.3% of the Italian population holds cryptocurrency. It's about 1.3 million people. You got countries around the world who have very, very lax tax laws, and there's some countries who are coming hard on these tax laws and cryptocurrencies. What are these rich cryptocurrency millionaires going to do? They're going to pack their bags and they're going to go to countries that are more friendly to them, like El Salvador. We've seen a lot of cryptocurrency millionaires moving towards El Salvador. Max Kaiser and Stacey Herbert, I think her last name is, they're moving there. They're really propagating what's happening over there. And the funny thing is, what I found astonishing was Portugal is also imposing a 28% tax on capital gains from cryptocurrency. Now, Portugal used to be a tax haven for cryptocurrencies where they had no tax, and now they're also trying to get their hands on their piece of the pie. Not a good step forward for us in the cryptoverse and the Italians and the Portuguese who have been investing in cryptocurrencies. Next one is Stripe is to enable fiat to crypto on-ramp. So if you don't know what Stripe is a very, very large online payment gateway. A lot of businesses use them because they have an easy-to-use backend that can be easily embedded into many different software, many different websites. A lot of businesses use it to accept payments. They do have very, very high fees. However, now they're moving into crypto and allowing people to swap their fiat directly to crypto. Now, why is this important? Why is this big news? It's big news because up until now, the only way you can really get your fiat into crypto is through a centralized exchange, such as Binance, KuCoin, Coinbase, CoinStash, CoinSpot. All these centralized exchanges is really the only way that you can move your crypto from your fiat over to crypto. Now, which means that you have to go through a centralized exchange, which then goes over to if you're doing DeFi, you got to send to a self-custody wallet or non-custodial wallet, and then do your DeFi there. What they're trying to do here is allow people to directly onboard their fiat from their bank accounts or their credit cards directly into crypto and use it into DeFi projects, such as projects on Ethereum, Solana, Avalanche, Cosmos, and Axelar. Some of the so these are some of the blockchains that they're going to be working on, but it's going to make it easier for people to directly move their fiat over to crypto and be able to use it in DeFi. Stripe will take care of all the anti-money laundering laws. They'll take care of all the KYC, et cetera, et cetera. So they are still a compliant organization. This service is only available in America for now, but they are talking about venturing out to other countries in the future. And last but not least, Binance continues their their mission on acquiring and growing as much as they can in this bear market. Binance enters Japan with the acquisition of Sakura Exchange. Now, Binance did start in the last bear market in 2017 after the last bull run. They have been quite a strong business during this bear market. They are the biggest, they are the largest crypto exchange in the world, and they're moving into a lot of different countries. CZ's out there meeting with a lot of governments, a lot of regulators, and creating agreements of understandings with many governments and cities. And now they've acquired Sakura, which is a Japanese regulated exchange. And obviously, it's what they say is 100% acquisition. They see that Japan is a place where blockchain and cryptocurrency is going to flourish in the future. And this is just a step for them to expand their network. So good to see Binance doing it. At the same time, guys, as much as I think Binance is a great company, the message is always the same. Never leave your coins on exchanges. Always having self-custody. We don't know what exchange is going to fall next. We don't know what's happening behind closed doors. This is why Bitcoin and cryptocurrency's ethos is around decentralization. So no central entity has complete control over your assets or any power, as we've seen with Apple, how much power they have, and all these large businesses like Facebook, Google, Netflix, Apple, Amazon. They have so much power because they have so much data. So keep yourself safe. Always make sure that you custody your own wallets and never trust anyone. That's what cryptocurrency is about. It's about removing the trust that you don't need to trust people to be able to do or exchange or transact. And the blockchain and the code can actually just verify the transactions, which makes it trustless. That's it from me, guys. I won't be around next Tuesday. I'm off to a 5-day event with Tony Robbins, A Date with Destiny. So I'm going to be doing that. I will see you guys next Friday. And Matt will be back next week on Monday, Tuesday, Wednesday with a pre-recorded video coming out on Thursday. Until then, have a great weekend. And as always, stay crypto. Peace out.